Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. Now in today's video, we are going to be talking about DWAC and we're going to be answering this main question. Should you buy this stock in 2022? This has been one of the most talked about stocks in the past couple of months because of a variety of reasons. The very first one, we had this huge pop in price. Stock went from $9 all the way up to 175. And this is giving a return of about 1,600%. Now, anytime we have a stock going up this much, this quick, we always have a ton of emotion in the market. People want to get in and they have fear, they have greed, hope, and they just get it's a very, very high risk situation we have. But on the flip side, anytime we have a stock go up that much, we always have sell-off no matter what. There has never been a stock go up that much that quick and not have sell-off shortly after. So obviously with that, the stock fell all the way down to about $70, consolidated there for a while, did find some overall support in here and some resistance up here, but we'll get into that later. But you might be asking, well, what happened in here, right? So this company is merging with Trump Media to create this social media platform called Truth. And Trump's idea behind it is he said, hey, I pretty much have 40 million voters that somewhat like me. If I create this platform, if that's just say half of them download it, that's 20 million users like that. So his idea is he wants almost like a hybrid of like a news, like a Twitter and a Facebook, almost like this hybrid. I think that's a very, very interesting thing, to be honest with you. And with that, a whole bunch of people hopped in, causing this stock to pretty much go parabolic, then sell off. But now you might be asking that question, Carter, should you buy it? So looking at the stock, it does have a variety of support and resistance. So for me, I noticed a lot of resistance up in here at the 65 to about $76, 65 to 76. Anytime it hits that, we always have this tendency to see some selling pressure in it. You can tell by these long wicks up in here, that represents a lot of selling, same up in here. Now, one thing that you might notice is support. So now anytime the stock falls in between about $40 and about $45, we have this tendency to see some support step in, a lot more buying pressure than selling pressure. So we had that move right in there. It also does look like it is going to be using that 200 moving average line, this yellow line, as some support, which is really, really solid. So now you have almost like a little bit of a hybrid of major support down here and a swing trading support up in here at about 47. So this is very interesting to me. And I think, yes, you could get in on some good prices, but answering that main question, should you buy it? I really think DWAC carries a lot of potential, but on the flip side, it's extremely risky. And the reason why I think that is because of some of the finances. If we look at the revenue, the company doesn't really make much money just because right now it's just pure, they're using investors' money. You can see they put in about $1.5 million into this, which is going to be, over the course, of a year, they could burn through that extremely fast, especially when creating an app. But I really think this could be a stock that could be, one that could easily hit $100 again, but also on the flip side, hit $20 or $15. Very, very high risk, high volatility with that higher reward. So for me, the strategy that I have is going to be a little different than a lot of yours. For me, major support in here. So anytime the stock falls in this price, I'm going to be buying some for sure. But also what I'm doing is I'm investing on a pretty much a weekly basis into this. So the idea I have behind that is if that's just say DWAC for, a variety of years, just doesn't do much and just a lot of consolidation. And before we have a huge move. So what I'm doing is I'm just averaging into this stock. So whether the stock goes up, I'm still making money. But the beauty of it is when it sells off, you're averaging down your shares. So once the stock recovers and starts moving its way back up, you make a lot of money. But also, I'm only putting about 2 to 5% of my portfolio into something like this just because of how risky it is. And what I mean by 2 to 5% is for every $100 I have in my portfolio, I'm only putting anywhere from $2 to $5 into that. So it's definitely something that I would recommend doing just because of the higher risk investment, but it's still one that you could easily make a ton of money off of in the future. Not to mention, if you just know these textbooks support and resistance, you guys will be good. So for me, that's my strategy. For me, it is a buy, but you have to be smart with it and understand the risk behind it. So that is it. I hope you guys enjoyed it. If you did, hit that like button, subscribe to the channel, and we'll see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care.